ZB headlines.
With blue bubble taxis, it's no trouble with a blue bubble. The Reserve Bank has cut the OCR another 50 basis points to 4.25% and is signalling more cuts ahead. ANZ, ASB, BNZ, Kiwi Bank and the Cooperative Bank have lowered their rates. Now back to Matt Heath and Tyler Adams.
Thank you very much, Raylene. Andrew, you're a mortgage advisor.
Yeah, I've got about 50 staff. My firm is Mortgage HQ, so we've got a lot of experience with the renewals and refix space and helping people with their mortgages.
Yeah. So, as a mortgage advisor, the same as a mortgage broker?
So that's the distinction. I think that it's key to make right from the beginning. So your old school reference point is everybody used to call mortgage advisors mortgage brokers, and it's a term in New Zealand that has just stuck.
Yeah.
But technically speaking, we're not mortgage brokers, we're mortgage advisors, and there's been a big shift to becoming financial advisors, especially the FMA, the Financial Market Authority, has overlaid new expectations into what they expect from financial advisors. So there's two kind of key ways to look at it when you're talking to a mortgage advisor, mortgage broker, is first thing they'll want to do is help you get a better deal. Interest rate, cash back. They really are like helping you broker a better deal from your bank. And if you're going to buy a property or you're settling on a property, that's really important. You want to get a good deal. Now, it used to be, well, we've been doing that 10 years at Mortgage HQ. It used to be when interest rates were dropping and it was a highly competitive market that you actually could reliably get better rates through a mortgage broker than going direct to the bank. Not always, but quite often. It's not as much the case these days as it used to be that you would get better deals through different banks or different channels. Like they're all kind of around about the same. The real difference you get working with a mortgage advisor is the long-term advice and planning. And like a mortgage advisor is super committed to understanding your whole position and your goals when you're buying. And like a lot of people, they have a vision for their life that they want to build like a financial freedom. And that's why they buy a property. They want to have stability. They want to create wealth for themselves. So negotiating good interest rates is part of that. But what you find with a lot of mortgage advisors and financial advisors in general is they want to help clients over a long term. And you don't really get that when you go to the bank direct. Like the banker that you're going to talk to is going to do everything they can to help you on the phone for that one particular call. But it's not likely that you're going to get that same banker year after year after year. Really good bankers get promoted and they leave. You know, the guy you just had on before, he worked at the bank for 10 years, got experience, and now he's a mortgage broker out on his own. So if you want consistency and you want somebody or like a company like Mortgage HQ that understands your position and your goals over the long term, don't get distracted by, how do I get the best rate? How do I get the best cash back? How do I shop around and spend a lot of time trying to nickel and dime for a 0.1% discount? I mean, that can help, but it's way more important you're working with somebody you trust as a financial advisor that helps you understand revolving credit and offsets and interest-only loans and asset protection and building wealth through owning multiple properties.
Yeah, it's well said.
And Andrew, what does a mortgage advisor cost you?
So a mortgage advisor is generally free. The only reason that it wouldn't be free is if the mortgage advisor right from the beginning understands that the client has a goal that revolves around the advisor won't get paid from any lender or institution, and they just discuss a fee that it might be $200 an hour, 10 hours, $2,000, and the client is very happy to pay that fee because like mortgage advisors, financial advisors, we are experts. We have training, we've got to do studies, we've got to hold accreditations, we have conduct obligations, we're monitored by the Financial Market Authority. 10 years ago when we started, you could be a taxi driver and the next day be a mortgage broker. It's not like that anymore. Like at Mortgage HQ, we have so many compliance obligations. It's unbelievable.
Yeah. Andrew, well, thank you very much for giving us a call.